Hello and welcome to Trade the Trend. My name is James Boyd. We welcome you here on this October 2nd. And just real quick, as we're getting started, we'd like to welcome all of you. We got Bharat, Sharon, High Speed, Life in the Fast Lane, Greg, Fez, and many others. Welcome to all. Now, just real quick as we get started, remember this class does focus on stocks, but it also focuses on options as well. When we talk about options, remember that options carry high level risk, not suitable for all investors. Understand that the information we talk about here today is provided for general informational purposes only. When we also talk about examples, we will do those on the Paper Money software application. Remember that investing involves risk, and also remember when we talk about short options, whether it's covered calls, we talk about cash secured puts. These are American style options that we talk about, which those could be assigned prior to expiration. Now also remember that coming up, you can go to schwab.com/events. And you could actually see some of the events upcoming and going into 2026. Also note here that if you take a look at, let's say, the three different events we like to highlight, we're going to be in Chicago and Anaheim doing a market drive. That's a one-day event, and you'll see the date there. In the middle of the page, you'll also see that we're going to be down in Orlando doing a two-day event. That's first day technical analysis, second day option strategies. If you're a Schwab client, as you probably already are, just know that you could join us in person and meet other like-minded investors like yourself. You could travel to those places. Maybe you're going there for personal, business, family, whatever it is. Check it out. Join us. Now, just real quick as we get started, we'll talk about kind of where the markets are. We had some questions on kind of the metals example. Gold and silver correcting some today, some more than others. We'll talk about that. We'll also talk about kind of the market is not all the same right now. Not everything is going up. There's some things hitting a fresh new low when other things are hitting brand new highs. And I think that's important to kind of identify what are those areas that still have the strength, but what are those areas that are weak, and what are some areas or stocks that have maybe started to fall down after some recent strength, and how does one manage those positions? Now, I'd like to go ahead and I'm going to bring this up. Let's go ahead and just pull up this real quick. We're going to pull up, and I'm going to go ahead and actually just grab the SPX for just a moment, okay? So if we look at the SPX, we did actually have a brand new high on that today. 67.31 was the high. Current price level, 67.10, okay? Down 20 points off that high, but the intraday low sitting right on the moving average. Significance of today is that the intraday low is right at where the moving average is trying to cross over, right? That's what we kind of been waiting for, and the moving average is starting to pinch. The NASDAQ itself, same thing, hit a brand new high. Crossover trying to as well. Now remember, if you get a crossover, that would be step 3, okay? Dow Jones itself, you're going to see that did not go to a brand new high, but it still has like a symmetrical triangle-like setup to it. This is why the word of the day, the week, has really been continuation to the upside, okay? And if you take a look, let's say, when we talk about the NASDAQ, of course, we're talking about the semiconductors, and we thought it was too high yesterday, and the day before that, the day before that, and the day before that, and the day before that, and dadgummit, it actually made another brand new high. So what kind of is trending can still trend up or down, and the semis actually here today kind of adding a little, interest and movement in some of those semiconductor stocks. We'll get to that. Now, a quick look that we want to kind of say, well, what has not been so hot? Well, we've actually seen the financial sector kind of pull back a little bit. Now, we did an example of Bank of America putting some protection on. We'll come to that, but that's actually not going up. You take a look at, let's say, the energy. This is not going up. Matter of fact, it's even falling down through the floor. And so this is why kind of sometimes you need to at least say, well, what is an exit? What is a way to maybe use a cover call if you wanted to, or even collar the position? That's not what the investor is looking for. Price down below both moving averages and a negative crossover. That's not the best bullish trend, okay? Now, and the risk of that is, could it fall down to the bottom of the channel? Okay, now, I'm not trying to be negative. I'm just trying to throw the question out there. Now, if we take a look at also communications, is that bullish? Well, it's just what we said. Price down below both moving averages and negative crossover. So communications aren't really that hot right now. When you look at utilities, you pull that up, IXU, that was a high yesterday. Now we got to kind of throw this question out there. Utilities hit a brand new high, and you have healthcare up there as well. That usually paints historically, that would have been a kind of maybe a white flag per se, cautionary flag, if you will. Why are those the ones that are hitting brand new highs? Okay, usually if you see healthcare, utilities, staples going to the upside, maybe even gold, if you will, that's usually kind of maybe a sign of consolidation and or a little building of volatility or anticipation of volatility. Okay. The only sector that we can actually really see that is actually pushed to a high is yours truly, technology itself. Okay. The industrials that we're watching, that's not, well, it did go to a short-term high intraday, but at least where it is right here, it's not holding there. Now, kitty cat, meow, that actually did poke back above. Don't normally see a white candle, but there it is. And if you look at that, it did poke back to the upside again. So Caterpillar, kitty cat, is actually still leading in that space. Okay? So the thing I would kind of take away from the strength of the market, if we're talking about indexes, NASDAQ still up there with stocks and technology sector. Second would actually really be the SPX. Okay? Third would be the ascending triangle on the Dow Jones, and the Russell, the smaller caps, trying to get a reversal, but it's kind of trailing a little bit. Now, that would kind of lead us to think that maybe are people expecting the volatility in the marketplace to pick up a little bit. Now, remember, the longer that this stays down, or if it stays down, okay, in a range, there's probably there's more trends conducive for bullish trades. If this breaks out to the upside, you're going to have a higher number of bearish example trades that they're pulling back in the shorter term. So really, many investors want to see this trying to stay below really about 17.5. Okay. The comment came is, what studies am I using on top of your candles? I don't have any. Well, this is just counting the number of whole bars. That's it. Okay. If you said, now, it's kind of something, let me just take a quick look. If you said, could you share that? I've had different ones. I'll just share the chart in general, okay? And then you can kind of pick and choose what you want there. I don't have I've had some things historically on the top. I think it's helpful to kind of see that, but I'm kind of more looking at actually the price graph itself, okay? Now, I want to go back to just real quick, healthcare for just a moment, okay? One of the positions that is in the paper money account, we're going to talk about this from a past trade example and a new trade example, is UNH. UNH broke out, ran to the upside, pulled back, held, ran back up, not a new high, pulled back, and has kind of created really like a higher level of potential support. Now, when you actually draw this and kind of say, okay, what do we got? Diagonal line, resistance, diagonal support, and now we got to ask the question mark, is this maybe the little breakout? Now, we know that UNH has had lots of problems, okay? The CEO that was killed, we know that there was some accounting questions, right, that was brought up as well. And if you look at that, we're just kind of wondering, is this the break? Now, by the way, this is not the first time it's done this. This was really a little bit, well, you could actually say it's a little bit more symmetrical. You really had one good run in here, consolidate. Second good run in here, consolidate. And I know we're asking the same question as before. How do we know this is going to break out? We don't know. If you knew that, the investor might put 100% of their portfolio in one position. You don't know that, so you position size. You don't know that, so you set a stop. Okay? Now, why are we bringing this up? Well, we got to talk about it because when you go look at the position, it's a long vertical. That long vertical is a call vertical. Okay? And what you're now going to see is it's a 333.40. That has 15 days remaining. When you take a look at this position, the only way you get 100% is you go way above the strike prices and you run out of time, okay? And if you look at this, we're about 69% of the maximum gain. So in this case, you had a $10 wide spread and you really, in this case, the investor paid about $4.55 for it. Okay, if my math is right and it looks right, $4.55 for it. So the debit was $4.55. You can see what the max loss is. Do the math. We're sitting here about $3.07. Now this is kind of interesting because a lot of people say, "Well, I can't get into stock at $300." Well, that's why people use verticals. Verticals give you a way to define the loss and the gain. There's a cap and a floor. And so the investor's just trying to get some of that upside potential without having to outlay, $352 a share. Now, what we're going to do is we're going to close this position down. We're going to try to take that gain, create closing order, sell the position. Okay. Now, I don't know what a good percent is for you, but I mean, this is kind of it was sitting at about 70%. We're going to sell the position. Notice it's the mid price. I got the NAT and the mid kind of far apart, which is leading me to believe this might be a little harder to get filled. We'll see this. Note the commission, send the order. Now, when I go back to this October 17th, you're going to see POS, sell. When we look at the bid-ask spread, it's about 35 cents there. Filled, okay? It wasn't as wide as I thought when I looked at the NAT mid price, 35 cents, which is not completely huge on a couple $100 stock. Now, what I want to do is let's kind of now roll, okay, to the next expiration. This one is pretty much toast, meaning in terms of time. We're going to go down to the November expiration. Now, when we look at the open interest here, couple thousand. When you look and kind of see, well, where are they really at? Well, probably at the money strike, 4,800. We look at the ones that have kind of been quite active here, 2,200 there, 2,800 there. Could this be people doing call spreads like bear call spreads? Could they be doing long call spreads out of the money? They could be, both. Now, let's say as an investor, we just kind of say, look, we're going to try to go something at the money or in the money and then sell something out of the money. It all comes down to break even. You understand that, right? If we choose, let's say the 350, right click there, buy, and we go right to where it says vertical. If we choose through the 350, 360, we get a 468 debit, you're going to see that it gives us the break even of 350, 468. Now, if you said, well, wonder if we actually did, let's say the 360, 370. Well, just changing the break even. You change the break even, you actually change probabilities. Okay? You change the break even. And by the way, we change the strikes, you change the debit, you change the debit, you change the break even, you change the debit, you change the max loss and max gain. And it's the same thing over and over and over. Now, I don't know about you, but you might choose strikes that are out of the money if you were really, really, really bullish. Okay? If you said, James, I think it could go up, but I don't know how bullish it's really going to be. A lot of investors usually choose that at the money to maybe one strike in the money. Okay, the 350, 360, 470 debit. We have the right to buy the shares at 350, and we have a 470 debit. Add those two together, you get the break even of 350, 470. Where are we now? We're at 352.80. Now, I think I'm a kind of conservative person, okay? So my strategy would actually kind of be, typically, kind of being a little bit more conservative. In the world of options, what does that mean? Pretty much having a greater chance to higher delta, okay? Lower break even. Now, if it goes up, could you pick the 360 and 370? Could these both gain in the short term? Yeah, they can. It just kind of, it really comes down to the expiration, which one has a greater chance to be above the break even / both strikes, okay? Now, if we take a look at this, what we're going to go ahead and do is, I need you to note the commission there. What we're going to do in this case is we're going to send the order. So we took down the UNH trade. Second, we put another position on. We're speculating, which means we don't know for sure. Get it? Okay. We don't know for sure where it's going to go, but we're saying, look, if that actually healthcare can go the upside. Now remember, you get this big, huge green candle, red. This red candle is the size of a Tic Tac, not very big, okay? And it's not even pulling back to the middle of the candle, not even pulling back down to the 10-day moving average yet. That's it. That's all the selling that there is so far. If people are getting out, they ain't getting out by a lot. Now, what does that kind of mean? Remember, if these pullbacks are less than 3 days, there's a pretty good chance that that trend might not be over. Okay, now we don't know what's going to happen tomorrow or the next day. You're going to just have to watch it over time. Now, the other one that we actually need to bring up that was kind of mentioned in the chat as well, I have 3 eyes. I got one right here. You can't see. Okay, I saw it in the corner of my eye. The other one that we need to bring up just real quick is AMD. Okay, now I don't know about you, what you think, but you know, it's just a good feeling. Okay, I choked as I laughed there. It's just a good feeling when those are green. Okay, now that doesn't necessarily, it could be up 3 cents. It's not, it's up 677. Okay, now when you look at that 677, you're thinking, oh, I have 50 shares. You thought you wish you had 500 shares. But then you come back to reality and said, oh, okay, I'm position sizing, blah, blah, blah. And then you're like, golly, it would be nice if the position size was bigger. Okay, well, let's kind of go back to this. Now, by the way, what's the difference between these? Well, one's the trend weekly, okay? That's the trend on the daily chart. The whole moving averages, green, 7 days for the 10-day, 14 days actually for the 20-period moving average. Now, this $479, that doesn't necessarily mean like, oh, just put our head in the sand and just hope it keeps going up. We want to keep an eye on, is there maybe a target where this might try to go to? Does the investor maybe need to adjust the stops? Now, by the way, this looks kind of fresh. When was that put on? That was put on the 23rd, okay? 23rd. Go back. Where was that? 23rd. So it looks like it was about right there. Now, what you're going to notice is that's where we got in. Now, notice, I'm a man, so this is not unusual for me. The very next day, we were kind of wrong. And I'm a man, so I usually am wrong at first. And then what you're going to notice is we were wrong the next day. That's fine. I'm a man. I'm usually wrong in the short term. But joking, just making sure you're listening. And what you're now going to notice is it kind of sits there and then sits there. Now, I don't know about you, but, you know, patience, it's hard. And I'm telling you, if you're going to try to ride that trend, man, being patient, allowing that support level to build, okay? Seeing if the price can still fluctuate. And it did. And it did. And it did. And what you're now going to notice is finally, hallelujah. Okay, now, the biggest things that I don't like to do is, let's say if I get in a position, I used to historically talk to friends and tell them about some of the things I was in. I stopped doing that. What I found was when I talk to other people about my positions in paper money, the biggest actually thing is they didn't do that well. So now I try to keep them a little secret. I don't. Okay? I feel like sometimes if you tell other people, that I don't know, I don't know. I just kind of feel like don't tell anyone else what you have. Now, do we need to raise up the stop? Let's go to actually this chart just for just a second. Do we need to raise the stop? Well, if we go down and we're looking to see where these lows are, could we raise the stop? Well, if we're using, let's say, an 8-day low, okay, now I want to kind of say something on this, okay? How many of you ever seen, how many of you ever heard of the character Jason Bourne, okay? We know Jason Bourne. But the biggest actually thing is Jason Bourne, I mean, no one knows what he really does. Kind of really investing, it kind of seems like Jason Bourne, okay? You're kind of rogue by yourself to some degree, and you know, you're kind of keeping things to yourself. That, to me, investing kind of seems like you're playing the Jason Bourne character, okay? I'm not talking about anything else. Now, what I'm going to do in this case is I'm talking about just kind of the life he lived. Now, if we take a look at this, I'm going to move up the stop. Why move up the stop? Well, because that stop was down here. Notice where this red and yellow line is, okay? Now, why are we talking about moving it up? Well, because the white line has gone up. Why has the white line gone up? Well, because over the last 8 days, the lowest intraday low has increased. So I'm just moving it up to where that line is. Now, if we got within, can anyone actually tell me At what point would we actually start to move up the stops more aggressively, like do a one-to-one reward risk methodology, etc.? It better be within 2% of where that target is. Is it a bad thing to maybe just put maybe an alert? Oh, absolutely not. Okay, right click, create an alert, and say, look, if we get at or above that 177.87 mark, this is what we just call that reward to risk stop adjustment. We label it as 1-to-1 or 1-to-1.5. Now, there's nothing to really on this, on the stock position, okay? Now, could we treat this like a new breakout right here now? Could we? Anything wrong with that? Could we layer on top of this a new position? Okay, now our first position was a stock position. Could we just maybe put on like a put spread? Could we actually maybe put on a cash secured pet? Could we do that on top of, maybe, right? Now let's go back and kind of take a quick peek at this. So if we said, could we do a put spread on this? Now let's say in this case, look, we want to sell a put spread with a 165, 160. Now look at the thousands. Open interest, 58, 84, 77, 75, 82. If we look at the volume today, couple hundred on 165, 160, and so on, let's layer on top of this. Now, how many of you have ever done this? You've gone back for seconds. What I mean by that is your initial entry was, think of it as your plate of food, okay? And you have that stock go up in your direction. You say, look, man, this has been pretty nice, and I want to see if I can double dip by layering on another type of trade on top of the stock trade. Now, if it goes up, it could be good. If it goes down, you got two positions. The put spread and the stock are not the same. They don't take the same amount of capital. They don't have the same max loss, blah, 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 blah. Okay, we know that. Now, if I say, well, look, we're going to sell the 165, and then what we're going to do is we're going to buy the 155 for downside protection. Now, when I did this, it defaults to the 165, 160. We'll change that to the ones from the 165, selling that, wanting the stock to stay above, and then buying the 155 put. Isha says, how did you know I was eating, JB? Because it's lunchtime. You're like, I'm closing my flap, so you can't see me. Yeah, I know. He's got Isha's now like, I'm closing the flap on my camera now. All right, here we go. So now what you're now going to see is, okay, we're layering on top. And this is what I don't understand. A lot of times we think that every trade idea has to be that, oh, we got to look for a new ticker symbol. Why? Maybe why not layer 2, 3 different type of strategies on top of the same trend? Why is one trade good for this account, but then it's not good for the margin account? Why? Why? You got to ask yourself why, okay? Now, it might not be the same position size, but we're looking for the same type of trends, okay? Now, in this case, what you're going to now notice is, note the commission there, check. We're going to send the order. There it is. Now, I want to also go back to, just real quick, 2 stocks. Now, remember, we've been doing this day over day. We've kind of been talking about some of the Dow stocks. Let's go to MarketWatch. Let's go to quotes. Let's go to public. And let's go to Dow Jones Industrial Average. Yeah, what are you having, by the way? If it's really good, we'll pause this. Now, here it is. Now, first off, we're pulling up MarketWatch, quotes, Dow Jones, okay? Now, when we look at this list, what are we ranking it by? We are ranking it by percentage change. Why don't you look at it by net change? Well, because the bigger dollar stocks would typically be at the top, okay? So we're ranking this by percentage. Now, the con about that is lower dollar stocks would tend to have a higher percentage, okay? But when we look at kind of movement, we tend to be on a percentage. So we look at Caterpillar, we talked about that. UNH, we talked about that. Boeing, I want to bring up for just a moment, okay? Why Boeing? Well, Boeing's in the industrial group, which is kind of also tied to Caterpillar to some degree. On the trend daily for Boeing, we actually do see trend 2. Trend 2 is where that stock has maybe been down and been beaten up a little bit, and maybe it's starting to pout its way to the upside. Now, so we'll come back to that in just a sec. But something that's kind of catching our eye is NVIDIA and Amazon and Apple. There she is. Now, if we pull these up and just kind of take a quick peeky of what these are looking like, that's a brand new high here today. Now, this is the worst thing about the stock market. You go to bed, the stock's at 187, you wake up, and the stock's up $2.50 higher this morning, and all you did was wake up. It's not a bad way to wake up. Now, it could be the opposite, where it's down $2.50, but that's just kind of where it feels nice because it opened up higher. Now, we did go to a brand new high. Have we actually checked back to kind of maybe where it broke out from? Not yet. Okay, technically, yesterday, was day one of the breakout. If we're talking about open and close, the body of the candle above resistance, today's day 2. Would it be surprising to see a little yank back down a little bit? Probably not. Okay, does that mean the trend's over? Probably not. If we go back and really look at that longer term, this really looks like a big long-term continuation. Okay, but the one I want to talk about is if you look at Apple and Amazon. If you look at Apple, we've kind of been knocking right at this 257. We've kind of been waiting for this stock to muster up gumption to really get above the area of resistance. Now, when we pull this up, you're going to kind of see that we ran up and then we pulled back. And the pullback was right to this area. Notice at the bottom here, the red candles is where we stopped going down, red, and where we started going back up was green. So at the bottom of every higher low is really red and green candles, side by side. And then it ran up a little bit and then it pulled back, and there's the red candle, and then there's the green candle. Red, green. Now, if we look at this today, you kind of have to say that, hey, got another higher low right there. And then today, sell off down to 254, but then punching back up here. Now, what's the resistance? It's still right around 257.98. The alert that we set yesterday was at 259, did not trigger the alert, but that earlier was kind of like a hammer candle. Okay, now I'm not the best candlestick reader. Okay, but I think it was called a hammer. Check me if I'm wrong. Okay, but I think it was a hammer. Now, kind of joking with you, but so now here's the deal. We can look on the stock volume and kind of see, is there any excess volume, or is the volume stepping in? Now remember, the volume stock, we're not just talking about stock volume, okay? If we looked at the volume here today, and the keyword is so far, we don't see any big volume, at least on the stock. Now you gotta remember, not everyone buys shares per se. They might be coming in through the route of the options. Now, we're just gonna take a quick peek, and what we're looking to see is on the open, we're looking at the volume and the open interest. We're looking to see like the percentage, okay? So what I'm doing is I'm just looking down at this column and this column, and I'm wanting to see really the volume compared to the open interest. The higher the percent, kind of the more interesting it is, okay? There's more activity, in other words. The one that kind of stands out the most is probably the 260 strike, okay? That one is actually pretty high. You come to the put side, that's about 30% there. The other one that's kind of standing out, kind of high volume relative to open interest, is the 260. Now, by the way, could they be doing maybe put spreads? They could be. Could they be selling puts by themselves? They could be. The only one that really knows, are they buying or what type of strategy is the broker themselves that can see the positions. Now, you might have some ideas of what those strategies might be, but we can't see people's accounts, okay? Now, when I look at the Novembers, I don't see anything there. So the Apple example, at least are we seeing in the volume? I don't see really a big push on volume, at least on the monthly options. The key word is yet. when I go look at these weeklies and say, is there any standout there? A little bit there. Okay, that's better. Okay, it's kind of more sporadic. It's not plastered all over on each strike. At least I don't see that, not yet. Now, does every breakout have to have a smattering of really volume? No. Does the volume, could it help? Sure, that's why we just talked about it. Now, I gotta go back and kind of just double check. Is there any position on Apple in the paper money account? IRA? No. We go to the margin account, anything there? No. Okay. I just want to double check something, make sure I'm not missing anything. It was down, and I want to verify, and that's actually really surprising to me. Now I'm shocked, okay? So I thought there was a position on that, but I think the example that we've actually had on there at least 2 or 3 times, there it is. It's in video. We'll come to that in just a sec, see if there's anything we need to do. But we want to go, I'm going to go back to the Apple example. Now, some people say, I'm going to wait for the breakout. Other people are like, yeah, you go ahead and wait, and I'm going to get in. Some people say, okay. Some people are like, you continue to wait, and I'm just going to get in right at the support level. Now, if some people get in right at the support level, we might call those people early. Why are they kind of getting in? Well, they're getting in maybe because they're actually buying off what they think is support, and they're trusting that line. If it doesn't work, if it doesn't, they're actually saying, look, my risk is still pretty small because I'm so close to support. And that's why we say that waiting for the moving averages, the crosses, etc., that confirmation is not free. Now, what we're going to do in this case is we're going to go long call vertical, okay? We're going to go long call vertical. We're going to do the 255 and sell the 265. Now, we're going to the Novembers, 50 days to expiration, okay? Now, what you're now going to see is we're going to right-click on the 255, buy, and then we're going to go right to where it says, in this case, vertical, okay? So we look at we're buying the 255, selling the 265, there it is, debit. Okay, now this just begs the question, okay? Wonder if we did like the 250, 265 and the 275. Should the debit be higher or lower? You do higher strikes, should the debit be higher or lower? Now, you sure hope if you sell out, you go out of the money. The debit should be lower. Let's verify. We were at like what, 468 with the lower strikes. If we go farther out of the money, the debit is 325. And then you're thinking into your mind, well, the break even should be lower, but you got to remember the strike is $10 higher than what it was before. So you got to go to 265, add on top 325. Okay, so really your break even is 268.25. Okay, so it's not just about the debit, because if the debit is lower, it could be lower because you chose a higher strike that is out of the money. Higher strike out of the money, lesser chance to be in the money, hence cheaper. Okay, now what I'm now going to do is move it back to what we did. Want to show you that 255, 265. Unlock that gear right there, okay? There it is. Now, here's the deal. This trade, if we're picking a long call vertical, we want to have a higher potential profitability. We have a $10 wide spread. The debit there is, in this case, 488. Max loss, there it is. Max profit, 512. Commission, 130 or $1.30. So now what you're going to see in this case is we're going to set in how much money is being tied up. They set aside 488 of the account value for the potential full max loss of this trade. Okay? Now what I'm going to do is we're going to go back and go send. Okay? Now, I want to go back just quickly And we need to see, is there anything that we need to consider on the NVIDIA example? Now, we pull this up for just a moment. What do we even have here? And it looks like we kind of have a little smattering. We sold the 180 put, that's at 60%. We sold the 175 put, that's at 64%. We sold the 170 put, that's at 79%. So we really had three different short puts, but you're thinking in your mind, well, those are just cash secured puts by themselves. Not completely true, because you're going to see that the downside, the number of contracts matches the out of the money puts for downside protection. Now that's at 79. This is at 64. That's at 60. Technically, we could take all of these down right here and then try to do it again. Now that's what I'm going to try to do. Now these are not close. These are not lower than $1. That's not lower than $1. That's lower than $1. Okay. That's the one that we have the highest percent. Now, here's the deal. Could we try to sell another October monthly and use that as the downside protection? That's what we're going to show. We don't always do that. We're going to buy that back, try to profit take, buy +1. Note the commission when we do this, 65 cents. And what we're going to now do is going to come back, take the next one down, the 175, about 64, right click. And notice this was not a stock, this was a potential obligation to buy the shares at the strike price, and the paper money account missed the chance to buy. And now it's just playing really the premium game. And the premium game is to sell high, buy back low. And if that's the case, that means the stock typically went up, the time went by, and or the volatility contracted. And that typically actually happens when the stock goes up. We're going to confirm and send, note the commission, send it. Now, what we're going to do in this case, now remember, we don't have a ton of time, okay? So in this case, what we're going to do is those filled. Let's say we went down to, let's say, the 182.50, okay? Now, the 182.50, let's say we just sell one there, and then we're going to push the other ones out in time. Now, if we sold one, we don't normally do this. What's the risk of selling something with 15 days? These 15 days better be bullish. We don't have a whole lot of time for it to recover, okay? Could we also have a greater assignment risk, which means could the paper money account theoretically have a chance of being the buy of the shares at the strike price? Yes. In the paper money account, that doesn't happen, but in real life, that could happen, especially as you come in closer to expiration, okay? Someone might exercise their long put, which means whoever sold the put could be the buyer of those shares. We're going to actually show this example of selling the put, 286, confirm send, and now what we're going to do in this case is send the order, okay? Now, I want to go back to just real quick, and I'm going to leave it there for those. I want to go back to the one that was not doing that well. Now, the one that was not doing that well, and the trend is really gone against us in this paper money example, is the 1200 1190 PET. Now, again, when you're in a bullish trade and you're in trend number one, boo. You're actually in a situation when the moving averages are red and you're in a bullish position, boo. It's really kind of ugly here. Now, here's what's kind of nice. If it goes our direction, we get up to a certain point. It can only be so good on a put spread or a call spread. Vice versa if it goes down. It could only be so bad to the downside given the max loss built in. We're already at 98.5% and it's down 330. So it's really like someone saying, well, we need to maybe get out of this position. We need to roll. Look, the damage has been done, okay? The damage has already been done. We're way below both strikes. And if we just start to come back up a little bit, we might start to chew off those losses a little bit. The only way we actually get it back is we need the stock to close above 1200. This is what's kind of nice about the put spreads or call spreads is if it goes the wrong direction, it can only be so bad given a vertical. Okay, that's kind of nice. Now, the nice thing also is there is a little bit of time left, but that trend definitely has gone the wrong way. Okay. Now, I want to go back to just real quick a couple other stocks that are kind of standing out. If we went back to, let's say, I just want to kind of show Marvel just real quick. Marvel's one of those stocks. We don't talk about Marvel, okay, a ton, but that's kind of one that's kind of filled in the gap. And that's one that we're going to kind of keep our eyes on there. A lower price dollar stock to some degree, a run back to the upside and a little higher low. Now, I wasn't planning on doing a trade like this, but then when I looked at it for the second time, I'm now having second thoughts. Now, here's the deal. We don't know what the stock volume is like. What's the stock volume? Oh, better than I thought. 13 million there. Now, this is kind of a little interesting. Can you tell me anything that kind of stands out interesting on this page that we already talked about? What was it? Well, the volatility is kind of high, 79, 60, 55, 53. That's not small, okay? Volume is actually pretty daggum high, okay? But what I'm kind of looking at with my three eyes is volume and open interest. Pretty decent amount of volume versus open interest. Now remember, we're looking at volume relative to OI, open interest. So if I looked at this one right here, the 87, we have 38.89 contracts today. Now that could be people that bought or sold, not netted off. And the higher the percentage, the more interesting it is. Okay? That's a high, we're looking for something that's a higher percentage. Well, if we did the math, let's say it's like not 85%. Now that's just today, okay? Now the other one that's kind of standing out is this one, 11,000 versus 12,000. That's about 50%. The other one that's kind of standing out a little bit is this one down here. The 100 is kind of standing out. Anything on the put side, dadgum right, 1,600 compared to 294, that's actually pretty high. This one is actually decently high. So now here's the deal. Not every time when you're looking at volume are you going to see all the strikes that are just smashing higher. Now you have historically seen that, okay? But the big thing is here, sometimes this is probably more normal that certain strikes might have more attention. Now, do we know if they're doing bullish or bearish trades? No, we just know that there's activity, okay? How do we know that these are not people just selling calls on shares that they already have? Oh, they could be, okay? They could have the shares, they sold the calls. They could be people just buying long calls. They could be people doing long call verticals. Could they be doing short call verticals? Yes, 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 okay? Now, what I'm going to do is on this one, we're going to go back to this for just a second. And let's say the investor said, look, I want to maybe buy the shares of stock, okay? Buy the shares of the stock. And I want to have some upside potential. Now, I'm going to show this for time's sake, just buying the shares of the stock, and then step two, selling the call. Now, this is kind of the example of maybe if you said, look, I don't want to contractually agree for a long period of time. I just want there to kind of be a short window where if someone wants to buy the shares at 90, they can come get them from me. And what you're now going to see is this investor, the paid money account in this case, agreeing to sell the shares at 90 from now to expiration. Now, the investor gets from 86.5 up to 90, but if you contractually agree, you're saying, look, I want that premium on top. So it's not just the stock appreciation, it's the option premium sandwiched, okay, on top. Now, here we go. So thank you, Cameron, for answering those questions in chat. Now what you're going to see in this case is we're going to go ahead and actually just do a classic covered call. Now, by the way, if you set a stop on this, how could you, for example, let's say, set a stop on it? Well, just like you did with the stock, you could say, look, if we get at or below a certain price, exit the position where it's buying the call back first and then selling the shares. Always remember when you set a stop or conditional order, it could be filled lower than what you put the stop in price for. That is the risk of a sell stop. Same thing with a buy stop, okay? Now, I also want to go back to another one. We'll fast fire, 30 seconds. Intel, we thought it was high before, hit another brand new high, okay? And the one we also want to point out in closing here, coin, little reversal action, and you're also going to see at the end here, hood hitting another brand new high. So we want to kind of wipe this out of our mind that, oh, highs are bad. Highs are good. Why? Because they're confirmation of momentum, demand at that moment in time, and trend. And in return, you would say, hallelujah. Okay? Now, and that's what the investor, when they're talking about riding the trend, that's what they're trying to do. Now, I want to thank Cameron May for answering those questions in chat. Remember, stay tuned for our next webcast coming up right at the top of the hour. Remember, this session has been recorded. Subscribe to the our YouTube channel, Trader Talks, Schwab Coaching Webcast. That way you can see all of our other content as well. Remember, with what we discussed, you can actually remember that all of our trades, we talked about it, they have risk. Be aware of that risk. Pick a strategy that you feel comfortable with in the paid money account and practice. And also remember that with what we talked about here today, it was done for example, illustrative purposes only. Tomorrow, Cameron will actually be teaching the advanced charting class at 1 p.m. Eastern. We will also, Kevin and I will teach at 9:30 a.m. on ETFs. That's live only for the ETF session, 9:30 tomorrow. And last, we also have, for example, tomorrow, where I will be covering Barb's class at 12 Eastern. So join us. Thanks so much for attending today's session on Trading the Trend. Thanks so much. Take care. Bye-bye.